Welcome to our session. Quick note for the live attendees here, just a reminder of the conference event that's tonight at MoPop. That's a Museum of just pop culture, yeah, okay. It's gone through about 3 or 4 names since it was first built. Anyway, and there are tickets that you can use to take the monorail, which starts just a couple blocks away into the museum. Wow, I'm sorry. So this next session is FIDO for Fintech, why it makes most sense. And our presenter is Arshad Noor, who is the CTO of StrongKey. So welcome, thank you.
Thank you, David. Good morning, everybody. Thank you all for being here today. If any of the content from today's presentation gives you the false impression that I may be a lawyer, I am not. It just so happens that I've been spending a lot of time around regulatory compliance for some of our customers. Started off in the PCI DSS space, and then one thing led to another. So I have had to spend a lot of time reading regulations and trying to figure out how to get technology to comply with those regulations. And I think we are at an inflection point in the industry today. If you are a student of economics, I'm sure you've studied in your Eco 101 long time ago about how finance used to be an unregulated industry. From what I understand, less than a century ago, private corporations could float their own currency. Well, imagine that today. But that's exactly what's going on in the digital world. And as people keep reminding me, data is the new currency. One can expect that regulation around data is only going to increase. So why should you care? We're in tech. We're all technologists. We love solving technology problems. These are just some of the regulations that I track, and there are a lot more than these. That much I can assure you. I don't have time to pay attention to all of them, so depending on the country you're from, there may be other more important regulations that you have to pay attention to, because these have the potential to come back and bite you. Some are already in force, some are future related, but in all of these cases, I do believe FIDO has a role to play, and that's what I'm going to talk about for the next 15 minutes. Payment Services Directive 2, it is already active, as I'm sure many of you know. These are the relevant articles in the regulation that are very specific to the technology that will authenticate, strong customer authentication. It's not just a buzzword. It is a mandatory requirement for transactions in PSD2. So if you're in the fintech space, if you're building applications, or if you're responsible for compliance to this regulation, SCA is going to become part of your day-to-day lexicon. Get familiar with it. Get familiar with the regulatory technical standards, because they are very specific about what they require. I'm going to get into it in just a little bit of detail. There is an exhaustive paper from the FIDO Alliance, a great paper. I was fortunate enough to contribute a little bit to it, but people who know a lot more about the regulation and its implications from the FIDO European Working Group have contributed a lot to that paper. And I would strongly encourage you to review that paper, because it goes into the detail of every article and how FIDO helps you comply with that specific requirement in that article within the regulation. So some of the more important things that one needs to pay attention to in PSD2 is about how a credential created has to be associated with a user, which we all accept, has to be secure, which is all good housekeeping stuff, and it must use one of the 2 or 3 authentication factors that we are all familiar with. Now, the more interesting parts come later, which is a dynamic link. And what the heck does this mean? A dynamic, so anytime a financial transaction has to be conducted. So there are certain requirements where transactions are deemed risky, and those risky transactions must meet the RTS, the regulatory technical standards for strong customer authentication. The whole purpose of PSD2, if you leave aside the whole philosophical goal of open banking and open finance, it is to ensure that a legitimate customer is not subject to a fraudulent transaction that hurts them. And that is the reason why the RTS is very specific about its requirements. So one of the mechanisms to ensure that a transaction is not fraudulent is that a customer must approve a transaction uniquely, which implies that there has to be a dynamic link from the transaction detail to the assertion provided by the consumer that he or she has accepted the transaction. And if any bit of information in the transaction changes, it is incumbent on the implementer of the technology to make sure that they get a new challenge so that the consumer is presented with a new challenge to the same transaction. So the two minimum requirements in PSD2 for SCA are that the payee and the amount must be visible to the consumer. This cannot be tampered with, and it must be, once the consumer has accepted the transaction, the result of that transaction to this dynamic link, which represents the transaction, must result in a unique authentication code. So FIDO uses the digital signature to represent the authentication code. How does it display the transaction? How does it ensure that this dynamic link is exactly what the FIDO authenticator signed? Are the mechanics and the details in compliance to PSD2. So I'm going to use an example for a mobile because it's a little easier to explain. I'm not going to get into the details of how you implement this in a browser, on a desktop and laptop. There's a whole thread on this in the WebAuthn group, issue number 1656 for those who are really interested, that talks about the implications of secure payment confirmation for PSD2 compliance. But in a mobile device, when a transaction is displayed to a consumer, there is the concept of a secure display. This is under the control of the operating system, and when leveraged with biometrics, when leveraged with the trusted execution environment or a secure element in the device that represents the key store for the FIDO credential, it is possible to get the acceptance of a consumer to a transaction that contains the dynamic link that cannot be manipulated by malware at this point. It's in the middle picture. Either the consumer cancels the transaction or may choose to go back to change an option, the payee or the amount or the payment instrument, but malware cannot tamper with that secure display. How do I know this? Well, I have to depend on the documentation of the system provider, the libraries, the APIs, and their documentation to make that determination. But it's not just that I, as a developer, have to rely on it. I have to have the application, the flow, the components tested, documented, evaluated, and audited by an independent auditor. This is Article 3 of the Payment Services Directive. It's not something I made up. It's mandatory. So unless an implementer of technology complies with these stipulations, how does any technology provider prove that they are in compliance with the RTS and PSD2? In a mobile device with a secure display, with biometrics, with cryptographic hardware key stores, it is possible to prove all of this. How is this possible to do this in a browser where, to the best of my understanding, there is no secure display, even though there may be a TPM or a different kind of a secure element on a desktop, laptop? These are the technical challenges that have to be addressed before a solution provider can go up to the national competent authority of a country in the European Union and declare to them that they have a solution in compliance to PSD2. Moving on, GDPR. Now, GDPR is not a fintech regulation, but there are implications to privacy, violations of privacy. Sure, you've already heard about the breaches of Marriott and British Airways that were dinged with hundreds of millions of dollars in fines for GDPR violations. But the latest one was AWS that just got hit for 750 million euro by Ireland for a GDPR violation. It's going to go through the courts, and eventually there will be some settlement, some judgment. What it is, we don't know, but the GDPR regulation has started showing its teeth. Now, one of the requirements is that anytime a consumer provides consent to a transaction or to create PII on a relying party's website, they have to provide unambiguous consent. Now, it's arguable what is unambiguous consent, but let me put it from a different perspective. You have a user web application that leverages passwords, and the user has to log into a website with passwords, and now they are asked to share PII. So the relying party has to show certain information, declarations, as is mandated by the law. I'm not going to go into the details. Your lawyers will be more than happy to share that with you. But they have to provide certain declarations and make sure that the consumer provides unambiguous consent. There is a database with 1.4 billion clear text passwords in the dark web. So if a consumer's password is as easy as a search on the dark web, how does the relying party prove that the consent is unambiguous? And it's not a man-in-the-middle attack, or it's some random person out there, as Ramesh described very nicely yesterday with his new initiative. It could be anyone that's created a synthetic identity with my name and has consented to things. So an RP runs the risk of violating GDPR if they cannot prove that the consent came from a legitimate user. In my opinion, with FIDO, this is easily surmountable because FIDO creates a digital signature. If the consumer is presented with these declarations, and if there is a digital signature to that consent, the binding of that credential ID to that consumer, which was created at registration time, will allow the RP to use that digital signature as proof of unambiguous consent to the GDPR declarations. As simple as that. It doesn't matter what authentication scheme is used thereafter. It's that unambiguous consent requirement that can potentially come back to bite. And this is not necessarily fintech. This is for any application where PII is shared, healthcare, any other information. So this is something relatively new that I did not know about until just a month ago. Australia has a regulation called consumer data rights. It is the equivalent of PSD2 because its philosophical goal is open banking. And consumer data rights requires that banks, the holders, data holders, must get consent from a consumer, their customer, to share that financial data that the bank holds with fintech companies or third parties that the consumer is interacting with. So it pretty much follows along the lines of GDPR with respect to unambiguous consent, but it is fintech related, it is banking related, it is already in force, and they have a more structured program in terms of who can be a data holder, how you get the authorization. And in my personal opinion, CDR authorization is equal to GDPR consent for sharing PII or PFI or PHI. And FIDO, once again, can help provide the consent proof. So the FFIEC, the Federal Financial Institutions Examination Council, is a branch of the United States government. What do? They are responsible for creating standards and procedures for how government agencies like the Federal Reserve System, the Consumer Financial Protection Bureau, the National Credit Union Organization, and there's one more I forget. These are the government agencies that regulate all depository-taking institutions in the United States. So if you're a bank, if you're a credit union, if you take deposits from the public, you are regulated. You have no choice. And those regulators take guidance from the FFIEC for how to audit the financial institution. So the guidelines and the standards that are pronounced by the FFIEC have an important aspect on what a bank or a credit union or any deposit-taking institution takes in. After 11 years, 10 years or 11 years, they updated their guidance for the first time around authentication and access control. All of the blue text are links to the specific information, so you'll find it very easily enough once you download the presentation. And for the very first time, they have mentioned FIDO in their guidance. And they have identified risks with SMS, OTP, and other factors of authentication, but they do not force it on the regulatory agencies, but they do describe that the institutions, the financial institutions, have to do their own risk assessment, and where warranted, they have to have mitigating controls. So it's clearly up to the financial institution to prove that the risk that they are trying to mitigate may or may not require FIDO. It's not up to the auditors to do that. Once the banks identify the risk, then they have to show how are they addressing that risk. But the fact that the FFIEC has actually identified FIDO for the very first time is a signal. And that signal puts all of the financial institutions on notice on what they have to do. And they have to prove that those controls are in place to address the risks that they have. They also reference a project that the National Institute of Standards and Technology conducted a few years ago at the National Cybersecurity Center of Excellence, NCCOE, where FIDO was actually used to eliminate or to mitigate the fraud risk. They have a practice guideline that runs into hundreds of pages that describe exactly how to leverage FIDO. Now, at the time that particular project was implemented, U2F and UAF were the only protocols. FIDO2 was still a work in progress at that time. But clearly, if anyone wanted to implement that kind of fraud mitigation today, I would strongly encourage using FIDO2 than anything else. So those are the things that have happened. Here are the things that are happening and that are likely to happen in the near future. The Federal Reserve System is trying to get to real-time processing payments. And FedNow is an initiative that is going to become reality in 2023, late 2022 or 2023. And what they are trying to get to is money transfers in real time. We all have that today as ACH, but we all know the problems with ACH transactions, the time lags and details. I would encourage you to pay attention to this because they are going to require very strong security controls if you are going to participate in FedNow ecosystem, digital certificates, digitally signed transactions. So the transaction authenticity and transaction integrity are new controls that the financial industry and the fintech industry is going to have to get used to. The banks are used to this, of course. Anyone who's interacting with the Federal Reserve today already, they're already doing all of this stuff. But the entrepreneurs, the new companies that are building fintech applications, they have to start thinking about all this. The most important thing that I anticipate that's going to happen, hopefully in my lifetime, but I think it's very near, is central bank digital currency. The stakes have already been set. More than 120 countries are already exploring this. Bahamas has introduced its very first CBDC. England, the Bank of England, has published what I think is one of the best white papers on CBDC. I'm already hearing noises on the internet that they are going to announce their implementation guidelines by the end of this calendar year. Let's see. The federal, and there are many other projects that are already very active around central bank digital currency. The implications of what's going on in this space are enormous. From an economic perspective, from a financial inclusion perspective, from how technology is going to be leveraged to enable that capability, and how important security is going to be to solving those problems. But there are some politics going on. I'm not going to dwell on this because I've been given the signal. There's some disagreement even between the governors of the Federal Reserve, but I think the Federal Reserve in the United States has no choice. China has made sure of that. They're going to have to announce something. There's already a project underway at MIT with the participating with the Federal Reserve of Boston. And I would encourage you to pay attention to this. If anyone thinks that we are all going to interact with the Federal Reserve System and exchange digital dollars with each other without something like FIDO strong authentication, I suggest you come back to planet Earth. That's not going to happen with user ID, passwords, SMS, and OTP. Transactions are likely going to have to be digitally signed. They're going to have to be encrypted, and all kinds of controls to make sure that this thing is secure enough. There are so many regulations out there. The regulations is a link to DLA Piper. They are a law firm that are tracking privacy, security regulations all over the world. So it's a one-stop shop for the country that you may be trying to operate in, and what do you have to worry about. I personally believe FIDO can solve two of the most important controls that can help protect data out there. I would encourage you to learn more about that. Always available, just one email away to answering any questions. Thank you all.
Thank you, Arshad. We have limited time, so I'm just going to take the one question we got from online, and it is about technical obstacles for PSD2 in browser. Does that mean that currently there is no web e-commerce which is PSD2 compliant?
There are experiments going on. If you're part of the WebAuthn group or the Web Payments group, you'll probably find that there is a technology called Secure Payment Confirmation that is already being tested by very large companies, and it's showing promise. I think it has great potential. But there are some gaps, technical gaps, that are not unresolvable. They are problems that can be solved, that need to be addressed, in my opinion, in order to comply with a specific requirement of PSD2 Article 3. And once those are resolved, I think a solution is going to be available for browser platforms.
Excellent. Thank you very much. Thank you again, Arshad.
Thank you all.